What is going on, everyone? Welcome back to another video. Another day, another dollar with your boy. Once again, we are breaking down the S&P 500 futures contract. We're going to be breaking it from the top down. We're going to look at our monthly, our weekly, our daily time frame, and then we're going to jump right into our 30-minute intraday time frame. Kind of discuss what happened today, some trade locations that I was involved in, and then overall give you guys some updated destinations, and we'll basically mark our destinations together today. So let's go ahead and dive right into it. If you guys do not mind, please leave a like down below. Comment something, how you guys trade. If you guys didn't trade, what did you do today? How did you do? And hopefully you're doing well. All right, so let's go ahead and get into it. So we are looking at our monthly time frame. This is our monthly time frame. As you can see, we were in a monthly balance, or in a period of consolidation. Once we took out July's low in August, we put ourselves into a balance. And then come September, we took out August's low, putting ourselves one time framing down, meaning the market is setting higher or lower highs and lower lows. So we are one time framing down. We continue that trend by taking out last month's low. So far early in October, we took out last month's low of 42.77. Keep that number in mind. 42.77. That will be a key level here in the future. 42.77 was the last month's low. We continue to drive down, taking out that monthly low and then setting a new low on in October, setting the low of 42.5125. All right. So the monthly is one time framing down. So we are back inside of that previous extreme monthly balance that we had. We had that big extreme monthly balance that was right here at that 43.2750 level. So far, we got below it, back tested it, and now we are being accepted inside of it. So for me, the next destination on the downside as far as our monthly goes is going to be June's low of 41.78. All right, will be June's low, and honestly, that's a pretty good level in my opinion. That is where these 2 months, April and May, kind of battled back and forth. Was around that 41.78. We tried to have some type of battle there, trying to find acceptance above that 4100 and 4200 level. So that's going to be a key level for me in the monthly. Is anywhere from that 42 to 41.50 level will be a key hold for me. If we hold above that, we should see this market come back into some type of balance in the future. But for now, the monthly is one time framing down. Now let's go ahead and look at our weekly. Let's see what our weekly looks like inside of this monthly balance. You can see here clearly, after breaking out that monthly balance to the downside, we have been one time framing down several weeks in a row now. We've been one time framing down 3 weeks in a row after coming out of our weekly balance. All right, our weekly balance we came out of at 44.2325. So if you shorted, once we got below that weekly balance low of 44.2325, you're in the money pretty good. And guess what? You're probably covering shares right now, right? If you've shorted here, you're in the money pretty good. Let's just say that is your short area and you're where we're at the close. You're 150 points in the money right now. That's some serious cash right there. So you're probably taking some off of the table if you haven't already. And that might be why we're starting to see some bids come in late in the evening time like we have been these past several days. For me, on the weekly, our target is still the same, that 41.70 level. Or the 41.50, anywhere from that 4200 to 41.50, back where we had all of these wicks up right here, struggled, and we finally found some type of acceptance. So basically, same area that I was discussing just a moment ago, from that 4200 down to that 41.50 level, will be kind of a key hold for me on the weekly. As far as our weekly destination, our next downside destination is going to be that low of 41.74 back from May. All right, May will be the next weekly low for me. All right, let's go ahead and look at our daily time frame. This is where things get interesting. You can see gap above. When we broke out that balance on the weekly time frame, there's a gap above us and a gap below us. Let's pull up these gaps real quick. We have a gap above and a gap below us. Today we got, I mean, right near it. What the gap start? Gap started at 42.49.25 is where that started. All right, so 49. What was it again? 42.49.25. So 49.25 is where that gap started. Today's low was 51.25. So we didn't even get into it. We got very, very close to getting into that gap on the downside. Guess where the 200-day moving average is located? 42.34, just below where that gap gets filled. So two things are, processing in my mind, right? So we have this gap below us. We have this gap above us. The 20-day moving average is in the gap above. The 200-day moving average is near the gap below. If I pull up our daily balance, you can see that we've come out of our daily balance to the downside and got pretty good extension to the downside, in my opinion. So what is going to happen here? Do we continue to one-time frame down, meaning we take out today's low and drive lower? Or is this going to be an area? Are we getting just close enough to this 200-day moving average here, 42.34, where people are going to start covering from their short way up here, right? If you shorted way up here at the 49 level, if you shorted way up there, you're covering near this 200-day moving average or establishing a long position near this 200-day moving average, right? A good opportunity for anybody that is a long-term holder to buy in this market. Maybe that's what's going to be happening. But will that be enough to sustain a move higher or cause some type of slowdown in the one-time frame down? As of right now, sellers are in control and remain in control on the daily and in our intraday time frame. But there were some key signs today, and we'll go over that in the intraday 30-minute time frame. Volume today was higher, above average. Average volume so far has been 1.2 million. Today we did 1.8, which is really good. Really good volume there. Above average, pretty much on the sell side. So right now you have, what is this, 1, 2, 3, 4, 5 days worth of long positions that are underwater. So obviously that caused some liquidation today once we broke this low. And then short-term, short players pushing the market lower was also part of the move, right? Obviously, we want to see volume continue to pick up. We want to see, if you're a seller, you want to see volume continue to pick up. You want to see us take out today's low and then test that 200-day moving average at 34, which is only a couple more points below us. So keep that in mind. If this market continues to push lower, that'll be a pretty big hold area. If we get below that, then like I said, 4,200, 41.78 and then 41.50 are going to be my next destinations on the downside as far as I'm concerned. And then obviously where that gap gets filled at 41, not 41. Gap gets filled at 42.39.75. So literally 5 points above where the 200-day moving average. So do we fill that gap, hold the 200, and then rotate back up higher? That's the question. If we get below it, we will not see new highs on the year. If we hold above it, there's still an opportunity to see new highs on the year. So let's see how we push into this fourth quarter here. Right now, market is in the short term, short. Let's go ahead and look at our 30-minute time frame and kind of discuss what happened today. We won't review the NASDAQ. We're just going to go over the ES today. If you guys want to see more NASDAQ in the future, just leave a comment down below. Just comment NASDAQ and we'll make that happen. All right, so beautiful, beautiful, beautiful B shape. If you look at this, it looks like a lowercase b, right? That is for long liquidation. B shape for long liquidation. Beautiful B shape. You have almost a highest accepted price, but it's too close to the day's high for it to be a highest accepted price. But you go out today with a double distribution. We attempted a third distribution late in the day and could not push down lower. And I think that's partly due to short covering, right? Short covering was coming in the market. Anybody that did short the pop in the afternoon rally high, anybody that did short that, such as myself, obviously covered down at the lows, causing a bit of a bid in the market. And then, you know, like I said earlier, the 200 level. But like I was saying in the monthly or in the weekly time frame, that 42.77 last month's low is going to be key to me. If we remain below it, right, which is basically near the upper portion of the lower distribution, right? So after we took out A's low and took out the previous day's low, it was a vacuum to the downside. And I mean, we pushed with some pretty good tempo in that B period. Pretty good tempo to the downside. I mean, if you look at that volume there alone, average volume in a 30-minute time frame is 121,000. We did 329,000 in that time frame. So pretty good push there, breaking that balance low at 42.77. Okay, so we'll take that out. And just for visual purposes, I'm going to highlight the upper distribution, and I'll highlight the lower distribution so you can see where single prints were located. So right in this area where there's nothing highlighted, that is what you call single prints, where there's nothing highlighted. You see how there's like no volume there? So that is what you call single prints. That's what you call emotional trading to the downside. And that is basically what we leaned against today, along with all the other MGI, the market generated information, to the short side. Pushes up, obviously, after B period push down, and C, on any push up where you were comfortable, you could have taken a short and then continued the one time frame down. We had another set of single prints that were created in C, continued to set new lows, and then we got a nice little rally in the afternoon. We eventually began to rally up, stopping the one time framing down. So we one time frame down 1, 2, 3, 4 time frames in a row. And then stop that after was it A, B, C, D, E, an F period. That's where I began to get short, was an F period. On the push up, I began to short around 69, 70, and 77 was my absolute last add-on. And I had one more I was ready to add on around 80. Now, that's where I started to get involved on the short side, was an afternoon rally high. This is a textbook afternoon rally high. What you look for in the market. You have a set of single prints above you, right? The market has been trying to push down. Okay, so you have single prints. The market is trying to push down. Okay, the market has broken out of a balance on our daily time frame to the downside. Strong MGI, and you have been one time framing down all morning long, right? And then you have point of control that's been lowered down here. There's a lot of other market generator information, such as having the overnight low, getting the initial balance low, right? Those are things that we keep in mind and in context whenever we're deciding on where we're going to short and if we're going to short. So I was comfortable on the push up here to take a short against not only where the single prints were, right, for an afternoon rally high, to not only take a short against this area here, but to take a short against our previous monthly low, okay? Take a short against our previous monthly low, and then take a short against our previous balance low, right? Keep in mind, all of this up here, all of these buyers, they're getting out, right? If they didn't get out whenever we first hit 42.77 on that push down, they're definitely getting out here. So that caused a bit of a speed bump on the buyer's side. And obviously anybody that was buying here, thinking that we were going to get a V-shaped recovery and filled where the single prints filled at 42.98, they got smacked in the face once we had this reversal bar. And then obviously we continued to liquidate down lower. And that's where I got out. So I was short up here, basically average of 75. And as we came in, I exited 68. And then I exited last position at 62. Obviously, I didn't get the low. I didn't know if we were going to continue to push down lower as the tempo and volume was kind of lackish in that sense. But overall, good trade there. Basically, my only trade of the day was the short here. I added when we pushed up in this next time frame, I added against the 144 simple moving average. And then we rolled down, and that's where I took off that second position at that 62 level. And I was very, very happy. Ended up on the day about 60 points in ES. Very good day overall for me and my trading. But keep in mind, this market is short. This market is continuing to push lower. So what are short-term traders going to do? They are going to do what has been successful until it is not successful anymore. So that being said, hopefully you were able to follow that. If not, I apologize. Good review for me. We'll go ahead and mark the day's high. We'll mark the day's low, and then we'll mark where our single prints begin and where they fill. So we'll go ahead and mark today's high at 43.17. Go ahead and mark that on your chart. Obviously, these are always levels that you want to be marking on your chart. Do your homework. That way you know when you're approaching a level and how you're going to react to that level, or what you should be expecting when you get to that level. So if we get to that high day, obviously you want to see sellers step in to protect the one-time framing, right? Obviously, if we take out today's high at 43.17, then the one-time framing down stops and we'll come back into a balance. All right, does that make sense? So right now the market is trending lower, but that stops once we set a higher high, right? Right now we're moving value lower. Value is that purple, right? Value is being moved lower. We are setting lower highs currently, right? This high day is lower than that high day. This high day is lower than that high day. You want to see that trend continue if you are a seller. That stops whenever you set a higher high, right? And same thing, value gets overlapping to higher, etc., right? So also, I've been saying we're going to get that 200-day moving average for the past, like, I don't know, 2 weeks. just throwing that out there. And right now we're pretty damn near it. We can see a market, I'll tell you that. We can see a market, that's for sure. All right, low of day. I love this stuff, man. I hope you guys enjoy it as much as I do, because I absolutely love it. All right, we have our afternoon rally high, which isn't but a couple points off of our single print. So the only reason I'm going to mark it is because it's near that previous balance low of 77. So our afternoon rally high is going to be 78.25. 78.25 is going to be our afternoon rally high. So if we get to that level, obviously you want to see sellers step in, but I would not begin to attempt to sell in this market until we got maybe into that, to the upper portion of the lower distribution, which is going to be where the single prints start here at 81.50. All right, so this is going to be the upper end of the lower distribution, meaning you're going to treat both of these sections like two separate days with a gap, right? So that's all single prints is an intraday gap. You're going to treat each segment like its own individual day. All right, so single prints start here. I hope that makes sense. Single prints start. So essentially, you want to see the sellers open up below the afternoon rally high, below where the single prints start at 81.50, which is the upper portion, right? It's okay if you chop around inside this lower portion for a little while before you take out the day's low. As long as you stay in this lower area, you get value to overlapping the lower or completely lower by taking out the previous day's low, which is at 51.25. Sellers remain in control. Where you start to get worried is once you get above value and you start to take back the set of single prints, right? You get above 42.81, you begin to get into the so-called gap or the single prints where they fill at 98.75, and then you begin to worry, all right, are sellers going to give everything up, and are we going to get into the upper distribution or in this range from 98.75 to 43.17, and then you have to worry about stopping the one-time framing down on the daily. Does that make sense? Hopefully I explained that well. So this is where the single prints fill. I don't know why I keep thinking it's September. This is where the single prints will fill. Right there. Okay. And then you have the upper distribution. Upper distribution, lower distribution. Upper distribution, lower distribution, right? So sellers want to open up in the lower distribution and take out the day's low, get value lower or overlapping lower. Buyers want to take back the sets of single prints here above you that are from 42.81.50 to 42.98.75 and get into the upper distribution. And at that point, value would begin to go from lower to overlapping the higher or totally higher. And then you have to worry about taking out the high at 43.17, stopping that one time frame and down. And then your next upside destination would be 43.3775. Okay. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. I hope this video was very helpful. If it was, please leave a like down below. If you made it this far, you are a trooper. I do appreciate the support. We'll catch you guys in the next one. See you.